Hello, my name is Jason Mercer, the Toronto Real Estate Board's Director of Market Analysis and Service Channels. TREB recently released its 4th annual Market Year in Review and Outlook report, along with the January MarketWatch statistics. I want to take a few minutes to summarize both reports for you. First off, let's do a quick look back. In 2018, we experienced a slow start for sales and price growth, followed by a pickup in the second half of the year. In the aggregate, we saw calendar year 2018 sales dip to 77,375, the lowest level of transactions since the recession. The average selling price was also down year over year to $787,195. Obviously, stricter mortgage qualification standards mandated by OSFI, generally higher borrowing costs, and the lingering effects of the Ontario Fair Housing Plan played a role in slower sales and a lower average selling price last year. Now looking forward, we expect to see a moderate improvement over last year's results. First off, recent polling by Ipsos on behalf of TREB suggests that more GTA residents are at least thinking about purchasing a home versus last year. This suggests that while the OSFI stress test and higher borrowing costs prompted some households to put their purchase decision on hold, many of these would-be homebuyers have reassessed their decision in terms of price point, home type, and/or location, and have decided to jump back into the market. On top of this, improving buyer intentions will be supported by slightly lower borrowing costs in 2019 compared to 2018, as Government of Canada bond yields trended noticeably lower at the end of 2018 and are expected to remain at these lower levels this year. Given that it will cost lenders less to raise funds, these savings are expected to be passed on to home buyers in the form of lower fixed mortgage rates. These positive changes, coupled with very low unemployment and strong population growth in the GTA, will see total sales, as reported through TREB's MarketWatch publication, increase to 83,000 in 2019. This means that sales will increase relative to flatlining listings, resulting in tighter market conditions and renewed price growth, albeit moderate price growth. The average selling price is expected to edge up to $820,000 this year, driven by the condo apartment market segment and, to a lesser degree, higher density low-rise housing types. Clearly, the forecast sales level will not reach back to the consecutive record levels set in 2015 and 2016. Part of the reason underlying this is the fact that first-time buying activity has trended lower, according to Ipsos's most recent home buyer survey. First-time buyers represent new households entering the home ownership market and can therefore provide a substantial boost to home sales, or lack thereof, as we saw over the past year. We also have new results for the first month of 2019. Greater Toronto Area Realtors reported 4,009 home sales through TREB's MLS system in January 2019, up by 0.6% compared to January 2018. On a preliminary seasonally adjusted basis, sales are up by 3.4% compared to December 2018. The MLS Home Price Index composite benchmark price was up by 2.7% compared to January 2018. The condominium apartment market segment continued to lead the way in terms of price growth. The overall average selling price was up by 1.7% on a year-over-year basis. And, after preliminary seasonal adjustment, the average selling price edged lower compared to December 2018. I would caution using January figures on their own as an indicator of market direction, one way or the other. Instead, I look forward to speaking with you over the next few months as we move towards the spring market. Over this time, we will develop a clearer view on how the market is unfolding. Thanks very much, and I look forward to speaking with you again soon.
Brought to you by GTA Realtors.